So did we call it or did we call it? Meta reported earnings beating expectations and originally gapping up 4%. But again, during its earnings call, due to poor guidance, just like we talked about in today's live stream for that Meta earning reports, Meta ended up selling off. And in this video, I'm going to break it all down for you. Please make sure you don't even just stop here. Feel free to do even more due diligence to have a better understanding on why Meta stock sold off. Again, I really hope that you do learn something new. And if you do, please consider dropping a thumbs up and subscribing to the channel if you feel like we earned it. I also do want to invite you to my live trading session tomorrow. It's the second link in the description down below. You'll be able to see every entry and every exit that I take during that live trading session. And we start right at market open. So again, make sure you don't waste time. Second link in the description down below. Let's go ahead and start sharing my screen just so you guys can see overall earnings per share came in at $4.39, beating expectation of $3.64, and overall revenue came in at $34.15 billion with the expectation of $33.57. So overall earnings report was better than what was expected. So what caused this huge sell-off? Again, not only is Meta down 3.35%, but let's talk about the range of movement, right? From overall highs of 316 to overall lows of where we're at right now, around 289. That is an 8.3% move. Again, something super important to pay attention to because that is the total range that we saw within just a few hours. Very, very significant for a billion-dollar company, right? This also caused the NASDAQ market to sell off. It's down right now almost 1%. But just so you can see, again, I don't personally like to trade stocks during earnings season in the sense of I don't like to trade the individual company when it's reporting earnings as I see it to be too volatile. So just so you guys can see, I have no open position on Meta. Because of this overall pullback, again, now we're approaching previous support levels, but let's talk about what caused it to sell off. Pretty much poor guidance for Q4. Based off of their previous experience, they said that it's hard for us to attribute demand softness directly to any specific geopolitical event. Historically, we've seen broader demand softening, pretty much just a slowdown when there's regional conflicts in the past, such as the Ukraine war, right? So they're just looking at previous patterns or previous kind of wars and seeing how that pretty much softened previous demand, right? We've reflected the latest trends and advertiser reaction, and we've seen that our Q4 outlook, which again, I think reflects great uncertainty and volatility ahead. So it is not certain. And I've said this so many times, like you can get into this. And again, this is why I want to encourage you to dig even a little bit deeper if you want to, but it's very, very simple. There's the earnings report and the earnings call. And sometimes people only like to focus on the actual earnings report. But the earnings call, in my opinion, sometimes is even more important because if you actually think about it, the earnings report is based off of the previous quarter. The earnings call is recapping the previous quarter, but also talking about future guidance for up and coming quarters, which is the most valuable thing for current investors or maybe even future investors, right? If they see like, oh, wow, we're expected to do very good. Maybe it's a reason or enough of a reason for me to want to continue to invest and or invest more money or start investing in Meta because of that guidance. But this time we saw things a little bit different, right? They gave poor expectations for up and coming quarters because of potential slowdowns, because of geopolitical issues, right? What's going on over in Palestine, right? And in Israel, if I'm not mistaken. Anytime there's any form of that uncertainty, obviously, again, it's going to bring some uncertainty to these advertisement-based platforms. So it's going to be very interesting to see how the market opens tomorrow, especially with Amazon, which is a $1 trillion company. I think it's at like 1.25. Let me double check right now. Amazon currently sits at $1.25 trillion market cap, just so you could see that here. 1.25 trillion. As of right now, it lost 5.58% just yesterday, and it lost another 1.9% after market hours. So a pretty significant pullback on Amazon, and it hasn't even reported earnings. So it's going to be reporting earnings tomorrow, right after the market closes. I have every intention of live streaming this for free on my YouTube channel. And again, all you literally have to do is not only subscribe, but you also have to make sure you turn on your post notifications, because if not, YouTube will literally not notify you when I go live. So just another reason to subscribe and turn on those post notifications. But again, I'll see you tomorrow at market open for our live trading session. If you want to see all of my entries and my exits, depending depending if the market continues to sell off, I'll short the market. If the market begins to recover, I'll go along with the market. It's the second link in the description down below. I'll be live right at market open, and I hope to see you there. I really hope that you learned something new in this video. And if you did, please consider destroying that like button. And like always, let's make sure that we end the year on a green note. Take care, team.